Is a stock market trap in play? Today, we see the S&P 500 wicking up higher, however, failing to close higher than what we saw out there on Christmas Eve. Then we jump over and look at the fear and greed index. Right now, we are dead smack in the middle of fear with a reading of 35. Then as we look at the most recent investor sentiment survey, we see the bulls drop down once again. Now they're reading at 37.8. We see the undecided notched up one tick. However, we had more of the previous bulls jump over to the bear side. Does this mean stocks could be in trouble as early as 2025? Now, when we come over and look at how the indices fared across the board, the Dow was up 28 points. The NASDAQ was down 10.77 points. S&P 500 was down 2.45 points. And the Russell 2000 was up 2.34. Now, when we look at advancing issues versus declining, we had 67.5% of issues advancing on the day. When we come over and look at the sectors, we can see financials were outpacing everything else. However, they weren't up by a large margin. Today, the stock market really suffered from a lack of catalyst. If we look out here this morning, we can essentially see we only had one major economic news release to pay attention to, and that was the weekly unemployment claims. They came in slightly better than what was forecasted, and they came in a little bit better than the last reading. Then as we jump down and we look at tomorrow, what do we have on deck in terms of news? We only have two news items coming out at 8:30, good trade balance, along with preliminary wholesale inventory numbers. However, both of those news items should be low impact. So that could be a problem out here for the stock market tomorrow. And we know the big boys want to hold on to their bonuses going into the end of the year. We come over today, we take a look at the volatility index. The VIX was up 45 cents. Now, on Tuesday, we saw the VIX was down, I think, roughly 14%, which was more than 10%, which indicated today or tomorrow, the VIX was likely going to have an update in the market. And that's exactly what we saw with the VIX being up. Now, when the VIX goes up, we normally see the S&P 500 going up as well. However, the SPY was only up 4 cents on the session. But then if we come over and look at the equal weight S&P 500, which is the RSP ticker symbol, notice it was actually up 0.29 cents or up 0.16%. So today we actually saw the equal weight S&P outpacing the S&P 500. However, neither of them were setting any type of records out here. Now, as we look at this SPY real quick, one of the warning signs out here for the bulls would be the fact that you look at Tuesday's candle, nice bullish candle closing near the high of the day. Then today we get a wick on the bottom of the candle. We get a wick on the top. However, the wick on top was enough to go above what we saw on Tuesday. However, it failed to close up at those levels. Then when we look right, you can also notice that's right within a minus development area, which quite often will into a consolidation or a slight pullback in the market. Now, if we are going to start to pull back from this area, we want to grab our Fibonacci retracement tool, measure swing low to the swing high. Now, a minor retracement would come in at the 38% retracement, but we know the S&P loves to retrace to the 50% level, which will come in about 591.71. Now, if we go ahead and we look at our daily counts, we're only on bar number 3 when we start the day off tomorrow, and we don't really have exhaustion in the market until we get to a 9 count like you saw over here. When the 9 count occurs, we normally will either go sideways or we'll start to pull back here just a bit. Look at the 4-hour chart and see the MACD indicator now has crossed to the upside. And on the 4-hour chart, tomorrow is going to be bar number 7. Now, maybe we get an 8, 9, and then we start to pull back a bit, or maybe we start to pull back a little bit before that. Let's not forget, we still have that gap out here from Tuesday, which needs to come back and get filled at about 594.71. Then as we come over and start looking at the 30-minute chart, notice the range today, a much smaller range than what we saw on Christmas Eve. The price action we had today is kind of the same type of price action I expected to see on Christmas Eve. Look right down here, we have that gap that we've talked about, but also when we zoom this up and really start looking at the profile, you can see we spent a good chunk of the day right here near the point of control. Now, if we can stay below the point of control tomorrow, that's going to open the door to coming back and testing this minus development area down here at about 600.50. We start breaching that, the low of the day then becomes in jeopardy. Then down here towards gap support, and maybe even all the way down here for the gap to be filled. However, the one thing that we lack is a major economic news catalyst. Now, if you want a way to support the channel and you trade with prop firms like Apex, My Funded Futures, or even Take Profit Trader, use the links in the description box down below to get the best deals. Now, as we come over and look at the futures markets real quick, what do we got? 4-hour chart. We were talking about this today on the live stream. And if you don't want to miss the next time I go live, make sure you're subscribed and you have the bell notifications turned on for all. But essentially, we had this nasty down candle from the FOMC meeting. Now, once we get above 50% of that candle, it increases the probabilities. We're going to come all the way back up and test the top of the candle. We also have this point of control up here at 61.31 3/4. And as we started to measure for a retracement down, this is the area that we talked about today on the live stream, which comes in at about 6,051.45. We did not make it down to the 38% retracement. I would not be so slight bit surprised if we actually make it down towards the 50. Now we can also see that we have an A to B equals C to D pattern, which actually completes up here at about 61.48. And depending on if this ends up being a small double top and we come down, maybe we set another ABC pattern up towards that area. Now the question is this going to be an area where a trap is being set, or is it going to be the fact that the market tries to slam down real quick, washing out the weaker longs up here, coming down towards the 38 or 50%, even 61.8 fib retracement level, and get a quick reaction out of that area, actually trapping lower level shorts, and then we go ahead and move on up to go ahead and take out some of these price targets up above us. Now, last night was a fantastic night. You can see that we were above value area high. We came down, we got the full rotation down through value area low. Then today we got back above it and we were trying to be on the buy side for a majority of the day. I did get chopped up with some of the price action. If you guys were on stream, you guys got to witness all that fun stuff. But now we've pushed up and now we're just basically consolidating up here near the highs. We look at value area low that comes in at 6,083.50. We have the point of control up here, 6,098.50 with value area high being 6103.50. Let's say tonight we go ahead and we breach, we start getting above 6103.5. Then I want to stay on the buy side of the market. I want to look for the market to continue to push up towards some of those targets that we were talking about off this 4-hour chart. And more specifically, 61.31 would be my first target. Then I'd want to turn my attention to the top of that big nasty 4-hour candle that Jay Powell induced at the last FOMC meeting. Now we come over and look at the dollar index today. We see basically a candle of indecision. We have a wick on the top, wick on the bottom of the candle, and the body is very, very small. We were talking about this today on the live stream as well, and the 10-year yield continued to rally up. However, it was unable to hold on to those highs. Now we actually have back-to-back shooting star type of candles. So will we finally start to see the yields starting to come back down? And if the dollar and yield start going back lower, that should actually be bullish out here for gold. Now, some of the levels that we're watching on gold, can we get above this high volume area on the composite profile at about 26.75 and hold above it? Or do we simply come up here and set another ABC pattern on the way down? Notice we've already been able to crack the swing low over here. So now if we come back down and crack the swing low once again at a price point of 25.95, watch out. We're likely to come back down, test the swing low anywhere from 25.42 up here towards the candle body at about 25.70. Now, when we come over and look at the QQQs real quick, notice we're still holding off the VWAPs, basically bouncing off the VWAPs, off the anchored VWAPs, and we're on the move on the way back up. However, not so fast, right? We want to go ahead and notice that we can see we had a wick on the top of the candle today. We were unable to close above the high that we had from Tuesday. Then if we were to pull a Fibonacci retracement from the all-time high down towards this low, notice we're right near the 61.8. We have not breached the 78.6 Fibonacci retracement level yet. If we do get above this price point of 532.92, we'll probably see the Qs making another new all-time high. Out here on the 4-hour chart, we can see the MACD indicator trying to pinch together, has not crossed over yet. And you can see we've done a pretty good job of essentially erasing Jay Powell's nasty down candle. Out here on the 30-minute chart, you can see we've rallied up. Now the MACD indicator is basically flattening out. Now, where this is going to be dangerous out here for the shorts, if the MACD indicator simply comes down towards the zero line and we're still hovering up in this area, aka we have not come down and filled the gap at 522.92, then that could be nothing more than setting up another leg up in this market. And that would take us to some of the higher price targets that we have talked about. That would also probably take us all the way back, undoing the FOMC day. Now, when we come over and look at the futures markets real quick, I know this chart may look messy a little bit, but here are some of the levels that we're watching today on the live stream. We kept talking about, we have an ABC pattern that completes at 22,269. We also have the top of that 4-hour candle for JPOW induced on the way down, along with an untested point of control at 22,301.50. Now, if you notice today, all right, we measured a Fibonacci retracement. Here's a swing low all the way up here to the swing high. Notice what we did today. We only came down to the 38% retracement. However, we were not able to come back and take out that swing high. So is this setting up a minor ABC pattern down that could take us probably down towards that 50% Fibonacci retracement level? If we go ahead and we grab our Fibonacci extension tool, we measure A to B equals C to D, and we can see that 100% level would just come above that 50% level, and that would give us another test into this minus development area off of the weekly profiles. And if you look at where that 50% level is, it's right near this little high volume node on the composite profile as well. So that's something we want to pay attention to. Do we actually see weakness on Friday? Keep in mind, Fridays tend to be more bullish than bearish in the market. We come over here, we look at the daily profiles, and as we look at this, what shape profile did we get today? D as in dog. And yes, that's why I got chopped up, right? Chop, 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 chop. We had the right call on a lot of the trades. However, I got chopped up quite a bit. And as we're looking at this profile, notice the point of control is at 22,006.75. Value area high will be 22,054 and a quarter, with value area low being 21,968.25. So tonight, if we start cracking below value area low, then I want to look down here to see, can we go back and test these candle bodies near the low down here at a price point of 21,926. We start breaching below that level, then I'm really gonna be scratching my head and say, you know what? Is there a possibility that we're gonna run all the way down, maybe taking out this point of control that we have down here at 21,671? Let me know your thoughts in the comment section down below. Do you guys think we're gonna hit this point of control? Or do you guys think we're gonna take out the high from last night and continue to rally up, undoing that FOMC candle? Now, if you guys like to learn how to automate your trailing stops, make sure to watch this video right here.